Hey everybody, JD here with your Rational Trader Market Analysis Daily. Today is Monday, August 25th. In today's video, I'm going to revisit one of the four pillars of rational trading. For those of you that are not familiar, the four pillars are the foundation of how I triangulate all of my trading and investing opinions. It's really the foundation of my macro views. And given that this is the last week of August, very, very slow, low volume, very quiet week in the market, I thought it would be good to just take a timeout, fly up to 30,000 feet and look down and see what's happening. And when I think about the four pillars, the one I really get the most out of at the moment are the moving averages, specifically the 50-day and 200-day moving average. And I have up now a chart of the Russell 2000 overlaid against the both the 50-day moving average and the 200-day moving average. And you can see the Russell 2000 should be no surprise. We've been doing quite well in small cap stocks and getting fairly overextended, especially when you compare it to, say, the Nasdaq. I'm going to pull up the 50-day and 200-day moving average for the Nasdaq, and you can see we are, just about, it looks like 700 points above the 50-day moving average for the Nasdaq, and the Russell 2000 was about on a percentage basis about the same level above the 50-day moving average. That's unique. That's a change. That's a paradigm shift. Whether or not it continues into the um, fall season after Labor Day remains to be seen. We do have a lot of signals in the market that are telling us that we are overbought here. So it would not be a surprise whatsoever to see some sort of a sell-off at some point. Again, we started getting that air out of the tires feeling last week, but on Friday, Jay Powell put the Federal Reserve put back in play, and zoom, away we went. And as you know, the market rallied. The market held up relatively well today. A slight bleeding of air out of the tires had us down about 50 basis points. The Russell was down actually almost a full percentage point. So, getting back to the process here of being less overbought. And that's a good thing because that gives us, on a two sigma trading standpoint, an opportunity to find more stocks, highly rated stocks that we can add to the portfolio. We are clearly in this overbought situation in the preferred position to be closing positions. We closed two very, very short-term trades on Friday, locked in very juicy profits thanks to that really one-day Federal Reserve put blow-off rally. But the piper needs to be paid, folks, and the moving day pillar of the rational trading, four pillars. Again, the other three pillars, valuations, the volatility index, and the yield curve, are all suggesting that a correction of some kind, I guess I should say the yield curve steepening is good in terms of we have a growing economy. So that's not really telling us one way or the other whether or not we're going to get a correction. But the other three pillars are, and so if I were to assess odds, the probabilities, at least as we head into September, unless we get a sell-off here in the last week of August, are going to have me favoring the downside in pretty much everything I do, trading wise or investing wise. So just be aware of that. For those that are following our mean reversion cash machine trades, a slight respite today. The calendar is very light as far as releases, and but that changes on Tuesday. So we're going to have more mean reversion cash machines. I'll have a couple ideas for you to trade as soon as tomorrow. That's all I have for today, folks. This is JD for The Rational Trader. Take care. I'll be back tomorrow, and we'll see you all next time.